This is Nightly Business Report with Tyler Matheson and Susie Garrett. Brought to you by...
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
The world has an obligation to make sure that we maintain the norm against the use of chemical weapons. Now, I have not made a final decision about various actions that might be taken to help enforce that norm. But as I've already said, I have had my military and our team look at a wide range of options.
Will he or won't he? The White House lays the groundwork for a strike on Syria, leaving Wall Street and the world waiting on tenterhooks. This is Nightly Business Report for Friday, August 30th. Good evening, everyone, and welcome. I'm Susie Garrett.
And I'm Bill Griffith in for Tyler tonight. A determined President Obama today making the case to justify a U.S. military strike against Syria over its use of chemical weapons. But no decisions have been made yet about when or how the U.S. will respond, only affirmations that no U.S. troops will be sent on the ground. Earlier, Secretary of State John Kerry said the administration has evidence that the Assad regime used chemical weapons which killed more than 1,000 Syrians, including hundreds of children. Kerry also said being war-weary does not allow us to turn the other cheek.
We know that after a decade of conflict, the American people are tired of war. Believe me, I am too. But fatigue does not absolve us of our responsibility. Just longing for peace does not necessarily bring it about.
With more on the Syrian crisis, how it's playing out in Washington, and what might happen next, we turn now to John Harwood. He's at the White House. John, a lot of words out today. What more can we glean from what President Obama said about the timing of a possible strike against Syria? Basically, what happens now?
They haven't signaled the timing, Susie, but it looks like a very strong probability that we will, in fact, strike Syria. And outside foreign policy experts that I've talked to think that it's more likely to come sooner rather than later. The president leaves for St. Petersburg on Tuesday, a meeting of the G20, and Congress comes back on the 9th of September. I would be surprised if the strike has not happened by before both of those things take place. And
what do you expect the president to hear from the G20 people if it hasn't happened by that time? I mean, you've got a lot of the world community that they talked about today that has been very silent through all of this, John.
They have been silent. Of course, the British House of Commons voted down an authorization of force yesterday. The president got a call from Prime Minister Hollande of France and has the idea that the French are supporting the possibility of a U.S. action. I just got off the phone with a conference call that the White House was conducting. They said Syria will come up at the G20. It's not a subject of formal meetings, and I think the president will get no shortage of advice if, in fact, it's not taking place by then.
John, a lot of the conversation so far has been on what the U.S. will or won't do. But what if Syria or its allies really retaliate? I mean, what are the secondary and tertiary consequences that we might face?
Those are the unknowable effects of striking militarily, and it's why so many people, including inside the White House, are nervous about this prospect. But when they look at all the options, every one of them is bad. The question is, what is the least bad option? And because the United States does have an interest in reinforcing its own credibility, having said that chemical weapons is a red line, and reinforcing the worldwide norm against the use of chemical weapons, the White House seems strongly on a path to deciding that the least bad option is, in fact, to use military force.
John Harwood at the White House. Thanks, John. Well, on Wall Street, the threat of U.S. military action against Syria weighed on the markets. The major averages ended lower for the first time in 3 sessions, but this final trading day of the month of August closed out another down week, and the biggest monthly decline for the Dow and the S&P since we saw last May of last year. Also hitting the markets today, disappointing consumer spending and personal income figures for the month of July, both rising just 0.1% last month, signaling a possible slowdown in growth. The Dow, when all was said and done, and the NASDAQ today, both down about 30 points. The S&P lost 5, and for the month, the Dow was down 4.5%. The NASDAQ dropped by 1%, and the S&P 500, that was down by 3%.
Well, for Wall Street, the volatile month of August is now over, but starting on Tuesday, September is chock full of data releases and events that could influence the Federal Reserve's asset-buying stimulus plans and have traders bracing for more wild swings in the markets. Steve Leisman has more on the crucial week ahead.
Thanks, guys. It's a big week for economic data, and that means it's a big week for the Federal Reserve to figure out if it's going to taper at its September meeting. That makes it a huge week for markets to watch the data. Tuesday, we get the Institute for Supply Management's manufacturing report. It's expected to be 53.8, down a little bit from the prior month, but still at a healthy level, suggesting growth. Auto sales in the U.S. expected at 15.7 million. The ADP jobs report, which tries to forecast the government jobs report, comes out Thursday. Economists looking for 170,000 jobs to have been created in August. And then the government jobs report, 173,000 expected for the month of August, with the unemployment rate unchanged at 7.4%. On top of that, we'll have 5 public appearances from 4 Fed presidents, 2 of them voters at the September 17th, 18th meeting. Data that is okay to strong could be enough to prompt the Fed to reduce its quantitative easing to try and stimulate the economy. But the economy will have to show at least some pickup from here. A report this morning showed consumer spending in July rose a less than expected 0.1%, getting the third quarter off to a pretty weak start. The key, listen to Fed officials and what they think of the new economic reports and whether they lean towards tapering or not. And we await word from Fed Chairman Ben Bernanke. His absence from Jackson Hole means he hasn't made a major speech on the economy since mid-July. For Nightly Business Report, Steve Leisman.
So we hit the ground running next week. Joining us to talk more about the markets, Joe Tanius, Global Market Strategist at JP Morgan Asset Management. Joe, always good to see you.
Always good to see you, too.
Tough month for August, but September is typically the worst month for the stock market. Do you expect another tough month for the markets?
You know, I'm expecting a busy month for the market, and as Steve just pointed out, it's going to start off with a bang, really. You've got a short week next week, but it's going to be very, very filled with economic data, not only from here in the U.S., but also from abroad. And I think as people are returning back from vacations, there's going to be quite a bit to chew on.
Joe, you heard our report from John Harwood in Washington talking about options that the U.S. military may take over the next couple of days. Let's say something does happen this weekend. What kind of market reaction are you expecting on Tuesday?
You know, honestly, I think the initial knee-jerk reaction is probably going to be a little bit negative. Despite, you know, all these reports that I've read and that, you know, this effort is going to be very targeted, it's going to be very measured, it's going to be very brief, it's hard to imagine or envision a scenario in which U.S. action doesn't have greater implications on the entire region. Of course, you have to worry, what does it mean for tension with Iran? What does it mean as far as what's going on in Egypt? Is it going to have any impact there, of course? And not only just what's going on in the Middle East, but also what about relationships outside of the Middle East and relationships with Russia? I think, you know, you may very well see oil prices start to pick up again. And as a result of that, I think there may be a bit of a pullback in the markets.
Last spring, Fed Chairman Bernanke threw out there that there was a possibility they began tapering in September. September's upon us. A lot has happened since he made that statement, though. Do you think they're likely to begin tapering or not?
I do think they are likely to begin tapering this September. You know, a lot has happened, but it's important to remember, you know, how the Fed is looking at this. It's really a cost-benefit analysis. What are the benefits of additional asset purchases from this point relative to the potential costs? And it should be pretty clear the economic backdrop has been improving. It's not perfect, but things are getting better. And I just don't think additional asset purchases from this point make any sense. And for that reason, I suspect you probably are going to hear of the Fed tapering later next month.
All right, so this is an extremely complicated and tricky time for investors. What have you been telling your clients at JP Morgan about what they should do to prepare for whether it's about Syria or the Fed or, you know, the jobs report next week? What should they be doing with their portfolios next week?
I think first and foremost, it's to keep an eye on the fundamentals. In the near term, there's always going to be noise. And of course, any international action on behalf of the U.S. going into Syria or invading the Middle East in any fashion is clearly going to have an impact on the capital markets in the near term. But focus on the fundamentals, because in the long run, stock markets tend to follow the fundamentals. And that should tell you that things are, in fact, improving. That having been said, We are expecting a little bit of noise in the markets next week, and clearly what's going on in Syria only complicates things. I think you need to have a very disciplined approach to risk-taking, and of course that means the right exposure to both stocks and risk assets and the right exposure to safe assets such as bonds, despite the fact that rates may be rising.
And that's Joe Tanius, a global market strategist at JP Morgan Asset Management. Thanks a lot, Joe.
Thank you.
A federal judge is speeding up the trial, objecting to a huge airline merger. The Justice Department's lawsuit challenging the proposed merger of American Airlines and U.S. Airways will now start on November 25th. That's good news for the two carriers, since the Justice Department wanted the trial to start next March, saying it needed more time to prepare its antitrust case.
It's called a black budget, and no one is supposed to know what's in it. However, top secret documents disclosed by NSA leaker Edward Snowden show a massive amount of money set aside for U.S. spying operations outside the CIA or the NSA. Eamon Javers joins us now with more on what's in those files, what it pays for, and where all that money is going to. It sounds like a John le Carré spy novel here, John.
Yeah,
Eamon.
absolutely. You know, I mean, this is one of the most closely held secrets of the U.S. intelligence community, is exactly how much does it spend on all of the things that it does? How many employees does the United States intelligence community actually have? They want to keep that secret because they don't want our enemies around the world to be able to sort of reverse engineer and figure out what we're up to. But thanks to this leak from Edward Snowden, the Washington Post was able to break a blockbuster story here and detail for the first time what exactly is in the $52.6 billion budget for the intelligence community, including more than 21,000 employees at the CIA. It's the first time we've seen this level of detail for all of the 16 different components of the intelligence community itself, guys.
Really fascinating reading that story, Eamon, and I know you've looked over it. What stood out most for you? What do we know now that we didn't know before?
Well, one of the things is the amazing resurgence of the CIA in this era of drone warfare and clandestine warfare around the world. The CIA reporting a $14.7 billion budget for itself. That makes it the biggest component of the intelligence community. For a long time, a lot of folks had thought that maybe the CIA was no longer the dominant player in U.S. intelligence. Maybe it was the National Geospatial Intelligence Agency, which flies satellites. Maybe the NSA was spending more money. But in fact, we now know $14.7 billion going to the CIA every year.
Of course, everybody's going to ask, how much damage does this leak do to U.S. intelligence?
Well, look, there are two camps. U.S. intelligence officials hate the fact that this information is now out there in the public domain, and there are other people who say, you know, if the United States taxpayer is going to spend $52.6 billion on anything, they should at least be able to have some sense of what they're spending it on and whether it's getting any results. And that's exactly what this report details, including some of the U.S. intelligence community's blind spots, like whether or not we know how safe Pakistan's nuclear weapons are, or whether or not we know anything about how capable the Chinese new advanced fighter jet actually is. So some strengths and weaknesses revealed in this report.
Put this in perspective for us in terms of the budget numbers. How does it compare to what the U.S. spent on intelligence a couple of years ago?
Well, the Washington Post calculated this as best they could. It's very difficult to do because we don't really have historical information either, just as we didn't have this information in the present day. But their best guess is this makes U.S. spending on intelligence now higher than it was even at the height of the Cold War by, $10 billion or so in current dollars.
Really adds up when you put it all together. Thank you
It
so
does.
much, Eamon. Really appreciate Eamon Javers reporting from Washington. And coming up on the program, we know the price tag for higher education is costly, but now some alumni are helping some current students make college pay off. And we'll show you how. But first, let's take a look at how the international markets closed today. Apple has a brand new way to get you excited about its newest iPhone being unveiled in less than 2 weeks. Starting today, Apple stores all across the country will allow current iPhone owners to trade in their working older models in exchange for a credit that you can use toward the purchase of a brand new phone.
Tonight we begin Market Focus with Dow component General Electric. That company now planning to spin off the consumer lending unit of its GE Capital division, which issues store credit cards to more than 55 million Americans. as it focuses on its core industrial operations. GE is also citing concerns about its exposure to the banking industry, according to the Wall Street Journal. At the close, shares of GE were up fractionally on an otherwise down day. They closed at $23.14 a share. A big jump in shares of Big Lots on news of positive quarterly earnings as well. The discount retailer beat analyst estimates, but despite that good report, the company is lowering its full-year earnings outlook because of weaker sales. But the news did not seem to discourage investors from bidding up that stock. Shares of Big Lots rose more than 2%, closed at $35.42.
But it wasn't a sweet quarter for Krispy Kreme. The donut chain didn't satisfy the street's sweet tooth after it reported disappointing profits and a weak outlook on Thursday after the market closed. Krispy Kreme shares tumbled 15%, but as you can see on the screen, the stock has more than doubled so far this year. And Cumulus Media is stepping up to compete against giants in the radio industry. The radio broadcaster is paying $260 million in cash to acquire Dial Global, one of the largest producers and operators of radio stations in the U.S. Cumulus Media is selling 53 radio stations for $238 million in cash so it can finance the deal. Cumulus Media stock rose 2% on the news, while Dial Global, it doesn't trade on any of the major stock exchanges, tumbled 48%.
Our Market Monitor guest tonight says he's buying stocks now, even with all the concerns about Syria hanging over investors. He's Kevin Carone, he's market strategist at Stifel Private Client Group. Kevin, always good to see you.
Good to be here.
I assume you're investing for the long term, but you're not concerned about the short-term headwinds, both political and economic?
Well, we focus on fundamentals, and we are long term. And what we do is look at opportunities in the marketplace. So we have seen over the last year a 20% plus rise in the equity markets, not driven so much by earnings, which were only up about 3%, but really investors who have become more comfortable with taking on risks. So prices moved higher for most of last year, and this is really the first time we've had any substantive pullback. We've had the Dow off about 4.5% the month of August. You have to go all the way back to the spring of 2012 to find a pullback which would have given a value investor like us an opportunity to evaluate stocks at more favorable prices.
Kevin, you've given us the names of 3 stocks that you're recommending to your clients and also to our viewers tonight. Let's go down the list. You start with Anheuser-Busch, BUD trading. What's your take on this? Why do you like it?
All right, well, we like Budweiser for a variety of reasons. Not the least is its international scope, the fact that it's got a very well-positioned international brand. We think it's tied to consumer trends, which we find to be particularly stable. We think the stock is undervalued here. It has pulled back. We think the stock could be worth north of $110. So we like the stock for a total return play, especially given the fact that there's a decent 2% plus dividend yield on the stock.
You also like Walmart, the #1 retailer, even though lately we've heard some anecdotal evidence about softness among consumers in this economy.
Yeah, again, these are consumer stocks tied to consumer trends. And you point out rightly that lately the consumer has been a little bit weaker. But a lot of what has happened with these companies relates to global weakness. Europe being soft, taxes coming through. We think in time that rolls off. The improvement in the employment picture eventually feeds into consumption. And while the current income and spending patterns for the last month have been somewhat weak, over time you'll find that the consumer has been very stable. So we like Walmart. We think the stock can trade up into north of $80 and provide a very nice total return.
All right, your third stock is not in the consumer area, Accenture, ticker symbol ACN. What's the story here?
Yeah, very consistent company, great balance sheet. This is a company that is positioned to provide consulting services to companies all around the world. Very big company with a tremendous depth of resources. The stock has pulled back here. IT spending has been somewhat weak. Overall investment spending around the globe has been somewhat weak, but it's a great franchise. And as companies are pressured to deliver profit growth in a slowing profit environment, I think it makes all the sense in the world for companies that are looking to drive profitability to turn to a company like Accenture over the long term. So we like all 3 of these companies because they provide good value given the fact that these markets have pulled back in here.
Fair enough. Any disclosures on either of those 3 stocks, either privately or with your company?
Stifel makes a market in all 3 of those stocks. We have a business relationship with Budweiser and Anheuser-Busch InBev, and that stock is also part of our analyst select list.
Very good. Kevin Carone, market strategist at Stifel Private Client Group. Always good to see you. Thanks.
Good to be here. Thank you.
The college football season officially kicked off last night, bringing many alumni back to campuses to root for their alma maters. But these days, some of those graduates are not only looking for a victory on the field, they might be scouting for investment opportunities through the current students. In the final installment of our series, New Ways of Paying for College and Making It Pay Off, Mary Thompson looks at alumni angels giving wings to new businesses.
For students, college is a big investment. For alumni, college may be the place to find them.
If you go to college campuses nowadays, it is remarkable to see the level of entrepreneurial activity happening there.
Pavan Nigam is co-founder of WebMD Inspivation, a proud graduate of the University of Wisconsin and founder of Silicon Valley Badgers. It's one of a growing number of alumni groups putting money in companies founded by students of their alma maters. The common college experience, a selling point for investors.
Investors generally like to invest in people who are like maybe 1 or 2 degrees of separation max away from them. Automatically, there's this bond and loyalty which kind of develops, which is essential for any startup.
The Angel Capital Corporation estimates there are about 50 Angel alumni groups from schools including Harvard, Marquette, and the University of Missouri. The schools sharing a strong sense of spirit and strong entrepreneurial, computer, math, and science programs. One of those schools, Baylor University. Graduate David Grubbs turning to the Baylor Angel Network to provide a critical round of funding for his company.
We were one of 4 companies selected to actually present at their Angel Breakfast. And then after the presentation, we had about 6 weeks of due diligence where they'd go through and actually interview us and really kind of try to poke holes in the business and make sure that we had a viable investment.
A plug-in and payment processing platform. For various fees, Grubbs' firm, Vendever, lets small and medium businesses set up e-commerce websites. Grubbs plans to use the funds raised through the Angel Network to hire more workers and increase marketing, moves he sees translating into higher revenue.
Right now, we're planning on closing out the end of the year around 6 figures, and then next year we'll be in the low 7 figures, and that's the goal. So as we start to refine the process.
A goal that's a score for the student, the school, and the alumni. For Nightly Business Report, I'm Mary Thompson.
Seen any good movies lately? Well, theater chain AMC Entertainment is counting on it. It filed paperwork today to begin selling its stock to the public for the first time ever. AMC is the nation's 2nd largest movie theater chain and is now owned by China's Dalian Wanda Group. It's hoping to raise $400 million, and it might use the proceeds to pay for acquisitions and pay down debt.
Well, the story of one institution of higher learning just passed a major milestone at the box office. Disney Pixar's Monsters University has now surpassed $700 million at the global box office, landing that film just behind the same studio's other animated hits, Toy Story 3, Finding Nemo, and Up. Monsters University is also expected to become Disney's highest-grossing animated film in China, taking in about $19 million in ticket sales. That's Nightly Business Report for tonight. Thanks for joining us. I'm Bill Griffith.
And Bill, it was great having you here.
I always enjoy it.
Have a great weekend, everyone. See you on Monday.
Nightly Business Report has been brought to you by
Sailing through the heart of historic cities and landscapes on a river, you get close to iconic landmarks, to local life, to cultural treasures. Viking River Cruises, exploring the world in comfort.
I'm Susie Garrett with a Nightly Business Report news brief. President Obama made the case today justifying a U.S. military strike against Syria, but made no decisions yet about when or how the U.S. will respond. On Wall Street, the threat of action against Syria, along with some disappointing consumer spending and income figures for July, weighed heavily on the markets. The Dow and the Nasdaq both lost 30 points, and the S&P lost 5 points. That closes out the worst month for the market since May of 2012. Consumer sentiment in August dipped slightly, coming off a 6-year high in July. Apple stores kicked off a trade-in program for older iPhones, offering credit toward a new iPhone. And the AMC movie theater chain filed paperwork to begin selling its stock to the public. Be sure to tune into Nightly Business Report right here on your public television station.